Hello, everybody, and thank you for joining us today for this open text webinar. Are you ready? Get ahead of the curve on e-invoicing compliance. This is the second webinar in the Compliance Clarity series, where we will show you how to unlock the data you need in order to be compliant. My name is Karen McNair, and I'll be your host for today's session. I have over 20 years of B2B marketing experience, ranging from strategy to execution across multiple disciplines within OpenText. But before we begin, I'd like to cover a few housekeeping items. Want you to know you can expand your slide area for maximum full screen by clicking on the arrows in the top right corner. And we also would ask that you place any questions that you have during the webinar into the submit through the Ask a Question box. We'll have a live Q&A session at the end of the webinar. So please know we do capture all these questions. If we do run out of time, we'll answer your questions later via email. If your slides are behind, push F5 on your keyboard and that will refresh the page. Also, we're going to have a recording of the event available after the event concludes, and you'll be able to access that using the same audience link that was sent to you earlier. Now, it's my pleasure to introduce our speaker for today, Beth Allegra. She's a senior solutions consultant at OpenText. Beth has over 20 years of experience in the EDI and supply chain arena, spanning from implementations and project management to consulting and advising clients cross-industry. Beth?
Thank you, Karen. Good day, everybody. I'd like to take this time to review how OpenText can assist in overcoming compliance challenges and help you realize the benefits available from implementing e-invoicing with a single global provider. Now, the key areas of focus for today's session are going to be the growth and identifying the factors that are bringing e-invoicing into focus. And we're going to look at the challenges that e-invoicing brings from implementation to meeting compliance requirements. Of course, I'm going to review the options available to assist in overcoming those challenges and where OpenText can play a role. And as Karen mentioned previously, we'll be collecting questions for the Q&A at the end. So please be sure to post in the section for Q&A as any questions come up. Now, events over the last few years have created almost a perfect storm scenario for e-invoicing to accelerate and expand globally. Although rather than the drastic outcome expected from a perfect storm, the e-invoicing storm scenario can be seen as a positive potential if you're prepared. Now, increased economic pressures from financial and geopolitical and health crises, coupled with significant drops in GDP for many countries, continue to drive businesses to seek more resource-efficient and cost-effective solutions. And e-invoicing can play a role there. Those same economic pressures are driving governments to look closer at their primary source of revenue, taxes. In many cases, this means focusing on ways to increase tax revenues, as well as gaining real-time visibility into their economy. And since increasing taxes during an economic drop is not reasonable, most countries are looking towards improving the realization of the taxes already due, a reduction in tax fraud. As a result, many governments have begun implementing e-invoicing and e-reporting mandates or expanding mandates already in place. For multinationals operating in Europe, Latin America, and Asia, e-invoicing is increasingly becoming a normal business expectation. Now, there are typically two forces we see driving businesses towards e-invoicing, as well as any other business cycle automation, really. The internal pressures, the drive for cost reductions, improving AP and AR processes, empowering your teams to increase productivity without increasing the head counts. And in parallel, these streamlining efforts work to improve cash flow, which in itself is the key driver to automation. There's also external pressure, such as environmental factors, shifting focus on business efficiencies and how ecologically minded you operate, The tax authorities and other government agencies seeking to increase indirect tax revenues through e-invoicing mandates, which often include severe penalties for companies that don't comply. Now, even with those drivers that are in force today, there's many obstacles slowing down the move to e-invoicing and overall automation. Our IDG Market Pulse survey on e-invoicing illustrated it was mostly technical concerns that are holding organizations back, with data security and complexity of integration, both internal and external, being the headline concerns. But also the perceived cost of implementing e-invoicing rounded out the top three. In that same survey, nearly half of the companies admitted their current invoicing processes were siloed, either geography, department, some other criteria. And in a Valentis report on global e-invoicing, the issue was highlighted, where multinational companies have a patchwork of different solutions, services, and providers for invoicing that can number into dozens, even hundreds. Now, all of that adds cost and complexity for businesses, which is very likely why the cost aspect ranked in the top three of challenges for automating invoicing processes. And as if the technical and the logistical challenges weren't enough, we find many companies are simply unaware of the full requirements. They may feel that sending an electronic document makes them compliant. However, that can be very far from the truth. And additional insights from our Market Pulse survey show that while almost 80% of invoices are sent in an electronic format, the majority of those are still processed manually at some point, as would be the case with a PDF file, a web portal, and certainly paper invoices. To paint a clear picture of the challenges, here we can see how organizations have increasingly complex landscapes, both internally and externally, with multiple applications, potentially siloed internal systems, your ERPs, your e-procurements, accounts payable and receivable applications, workflows and payment processing applications, and you get the picture. It just goes on and on. And externally, you need to connect with suppliers and buyers, and now increasingly to regional government e-invoicing portals as well. All of these systems require an exchange of detailed invoice data that complies with e-invoicing regulations in multiple countries. And this invoice data is often required to be in region or even industry-specific formats, CEDI, XML, and many others. And then as you increasingly open up your internal applications to your external partners, the data security becomes a critical concern. In contrast to the previous web of complexity, this depiction, we can see how having a single global solution provider can eliminate the vast majority of technical complexity and security concerns. OpenText is able to provide the bridge and the buffer between your internal systems and the variety of interfaces and formats that are being required throughout your partner community. Now we can look at each of these obstacles a little bit closer. Let's look at the complexity of technology. With the proliferation of new mandates, complexity is only going to increase. And more organizations are choosing to outsource the infrastructure and day-to-day management of their requirements to a trusted third-party provider. Now, outsourcing is a well-established means to extend your reach and the capabilities while reducing your total cost of ownership. But to properly deal with the technical complexity, it's important to choose a partner with decades of expertise in the integration as well as e-invoicing compliance. And integration itself isn't typically a core competency in most organizations, so outsourcing that complexity is becoming a standard practice. Be sure to choose a vendor with strength in application-to-application integration and having pre-built APIs to streamline connections into your internal systems. And working with a large global provider can greatly reduce your implementation timelines and costs by having pre-existing connections with many of your buyer and supplier communities. But you also need to be sure that you choose a provider that has the large global onboarding team capable of adding new partners at your needed pace. And you can be sure that data security is always a critical factor in any new integration project. And by working with a global provider you trust, security becomes an indirect concern. Allowing that provider to manage the variety of protocols and formats frees up your resources to focus on internal programs and processes. Now, additionally, you can enhance security by means of a robust identity and access management solution for connecting with partners that may need access to systems beyond simple data transfers. It's an option that OpenText Business Network is able to provide as well. And finally, the good news is that e-invoicing is generally a cost-saving exercise, with analysts suggesting savings are possible anywhere between 30 and 60% against manual invoice processes, which means that your e-invoicing implementation can pay for itself, typically with a return on investment in the first year. With that said, you should still look for a vendor with a scalable platform that has tiered pricing models and can accommodate small organizations as well as larger global enterprises. It's no wonder that 84% of our Market Pulse survey respondents felt it would be valuable to have a single global strategic e-invoicing partner who could address these obstacles for them. And so far, we've discussed the challenges of implementation, how they can be overcome. And I'd like to look a little closer at the overcoming compliance challenges. OpenText provides invoice compliance for 48 countries, and the list is constantly growing. And we ensure compliance through our own internal expertise, and we work directly with our external experts, like PricewaterhouseCoopers, Ernst & Young, who assess our solutions and make sure that they're compliant in each of the countries we operate in. Now, for efficiencies in our service, we partner with Sovos TrustWeaver, who's the market leader in digital signatures for e-invoicing globally. We also work with many global organizations and associations, such as CN and Fiscalis, those European standard bodies and representatives of the EU tax authorities. And through groups like GINA, the Global Exchange Networks Association, which is an industry body consisting of over 100 of the largest e-invoicing service providers in Europe and beyond, of which OpenText is a founding member. We're involved with the Business Payment Coalition initiative in the US, which is aiming for a common framework for e-invoicing and our operability to drive faster payments. An initiative that's being driven in part by the Federal Reserve Bank and NACHA, the National Automated Clearinghouse Association. And we are also a PEPL certified access point. Now, a little bit of history for some of you who may not be familiar. Value-added tax, or VAT, it's a unique, in itself, a self-assessment tax. Corporations effectively became tax collectors, and they were trusted to pay what they owe, which, periodic audits from the tax administration to ensure compliance. And traditionally, these audits can take place months or even years after the fact. And this required businesses to keep the archives for anywhere up to 11 years. And those were in paper format. Can you imagine the storage rooms? I'm sure you can. And this is where we refer to, or this is what we refer to as a post-audit invoicing, meaning simply audit occurs well after the invoicing cycle completed. So when electronic invoicing evolved, it initially copied this paper-based process, the post-audit model. And suppliers could issue invoices directly to their customers using existing established mechanisms, and the auditors just retrospectively verified their electronic records. In around 2010, a new approach to invoicing was pioneered in Latin America, with tax agencies in Mexico and Brazil focusing on the benefits in terms of enhanced fraud protection, increased tax collection, effectively reducing the VAT gap. Now, there's really two key initiatives that happened. First, the e-invoicing became mandatory, forcing all taxpayers to comply. And then secondly, the mandatory e-invoices had to be pre-approved or cleared by the tax administration or a certified agent. Now, as a result, this approach was originally referred to as the clearance model, although now it's often referred to as CTC, which stands for Continuous Transaction Controls, since not all governments who adopted the approach require invoices to be approved prior to sending them out. But instead, they only require maybe taxpayers report key invoice data in as close to real-time process as possible. And this is sometimes referred to as e-reporting. The key point here is that these approaches provide the tax authority with the ability to analyze the invoice data, identify the potential tax avoidance, and take actions where needed. In some cases, fining taxpayers to the tune of millions of dollars for unpaid taxes. The e-invoicing continues to evolve from the post-audit model originally used in Europe to those implemented in parts of the Nordic and Latin America, and now into many different models being embraced as new mandates arrive. This evolution simply adds complexity and cost for businesses, especially for multinationals, whose internal invoicing processes need to be flexible enough to support each of the different country models and their unique requirements. Now, to assist in the complexities of the multinational compliance, I'd like to introduce and provide some details on our e-invoicing readiness check service offering. I'm sure we can agree, finding the right approach to being compliant with e-invoicing and e-reporting isn't easy. And the first step is to gain the compliance clarity by identifying your current gaps in your data. And then you're going to need to proactively make any necessary changes in your backend systems and processes. And then you can move forward with implementing an e-invoicing program that provides complete compliance across all your global entities. Let's see how e-invoicing readiness check can provide an accelerated process to give you the clarity you need. The OpenText e-invoicing readiness check is an advisory service. And we analyze your business system data against the requirements of country-specific e-invoicing and e-reporting mandates. We follow a four-step methodology. It starts with a kickoff call to explain the entire process and what we'll need to do the work. Basically, we need to understand how you work. Do you have structured files? Do you PDF-only invoices? Just exactly how your processes are defined. We're going to discuss and identify all the possible use cases because each use case triggers different data requirements by the tax authority. And we want to make sure our analysis is thorough and complete. And once we have all the files and details, we're able to proceed. And then we'll enter into the analysis phase and we'll schedule our workshop with you. And during this phase, we look at the details and the various use cases, compare the files against the specs or specifications from the tax authorities, and make sure that the data is in the proper format and that it's present, basically. We're going to check for accuracy, completeness, relevance of your data in the context of e-invoicing and e-reporting for VAT compliance. We determine if the files will be able to comply with all of the business rules that the tax authority will apply against each country that you need to do business in. And the first set of deliverables happens right at the end of this analysis phase. The initial gap analysis is the first deliverable, as well as the first executive briefing listing the summary of our findings. Then we'll enter the workshop phase, where we review the gap analysis line by line. We're going to explain all of the identified gaps, and we're going to discuss corrective actions. This is where we're going to work together, collaborate heavily, reach agreement with you on how to close those gaps. Do you need to make changes in the business process? Is your future invoicing provider going to handle some of the gaps within the mapping process? And this is all identified and documented in that final gap analysis spreadsheet. And that's where the second set of deliverables, that's the updated gap analysis, which contains all of the decisions that were made during the workshop phase. And the metrics will be indicating how many gaps were closed and the actions identified to close the remaining gaps. And you'll also receive an updated executive briefing in the final engagement report. And of course, the fourth phase, we're going to make sure we go through acceptance and closure. We're going to review everything that's been provided, and we're going to make sure you're in agreement and you confirm that everything that's been done is documented and has covered everything that you were looking for. And if there's any points needing further discussion, we'll schedule those follow-ups as well. And just a brief summary and review of the key deliverables. I want to make sure that you have kind of a glimpse of what you'll be getting. And the first area is going to be our initial gap analysis worksheet and the summary of findings. That's the early on report that you'll be getting. And then the workshop itself to jointly review that information and document action plans that we agree upon. And then the final gap analysis report with the executive summaries and detailed findings. Now, with the surge of changes to e-invoicing and e-reporting legislation and significant fines for non-compliance in mind, you need to be proactive in your preparations. The e-invoicing readiness check enables you to meet these new obligations with full compliance and reduce the risk of potential fines and other sanctions. In understanding your business impacts, we're going to work with you to assess and understand those impacts by identifying your current gaps. And this process can be time-consuming and complex without the proper expertise. So most companies start preparing for the country mandates at least 1 to 2 years ahead of the reforms. But you're going to get quick results. The changes to the business process and ERP systems also take time to implement. It's critical that you have detailed, actionable tasks towards closing those gaps before you go into the implementation project. With an e-invoicing readiness check, you're going to have those details you need within a few weeks, allowing you to focus on the end goal of compliance. Now, after completing the e-invoicing readiness check service, our clients have provided some valuable feedback. Aside from being extremely beneficial to them, they also noted a few areas of specific benefit. Awareness, initially for the people working hands-on with the program and the implementations, but also secondly for their leadership through the executive briefing. It gives a clear view of how big the challenge is. And completing the e-invoicing readiness check creates right momentum within your company. And you're going to be able to secure the needed level of engagement from the teams that are going to be taking action to correct the gaps and ensure that the upcoming implementation project can be a success. Also noted was expertise. Now, we've done this many times, many clients, many countries, that we have years of experience in the e-invoicing space. Not only does studying every specification for every country take a lot of time, but it's also very complicated from a skill set perspective. You need to have two very different understandings. One is the technical understanding. You need to understand EDI, be able to read the technical UHXML specifications, understand data, qualifiers, code lists. But you also need to have a business understanding. You really need to know how that invoicing process works in your company. Now, for most of our clients, it's usually either or, depending upon who you talk to. The AP team is going to know the invoicing process very well, and your IT team may have some EDI skills, hopefully. But open text consultants have this double mindset, technical and functional, to help bridge any gaps within the organization. And lastly, the third benefit that was called out time and time again is time. Even if companies can gather both the functional and the technical skill sets internally, they don't usually have the bandwidth, along with their day jobs, to go through every single mandate that applies to the company. Now, every time we deliver any invoicing project or complete a readiness check, we grow our knowledge. And this allows us to help the next customer with even better level of detail and understanding as we see more and more use cases with each customer. Now, as we already discussed, e-invoicing is very much an integration challenge. OpenText Business Network is ideally placed to help our customers. We're a recognized leader in integration and have been automating and transforming global invoice processes for customers for over 45 years. We have the largest e-invoicing network in the world, exchanging over 4 billion invoices a year. Our cloud-based solution is completely agnostic to the different invoice processes, systems, and applications you have internally, simplifying the complexity of global e-invoicing integration across all departments, including domestic and cross-border flows. We work with you as a trusted partner to navigate the complexities of e-invoicing and e-reporting mandates to ensure global compliance. So the questions remain: are you ready to meet e-invoicing and e-reporting compliance? And are you ready to let OpenText help you bridge the gap? Now let's move on to your questions and answers. Karen?
We've gotten some great questions already, and let's just dive into it. Okay, let's go to our first question. Who typically participates on the customer side in the e-invoicing readiness check program, Beth?
Okay, well, that can vary slightly depending upon what we're analyzing. But generally, we always want to include an IT stakeholder. Someone has resource or responsibility for ERP systems, the middleware, and EDI. But it's equally critical that we have a finance stakeholder involved as well, someone that has the specific business flows for the accounts payable and the accounts receivable teams.
Okay, thank you. The next question has to do with what our relationship is with PricewaterhouseCoopers.
Well, we're contracted and we work directly with our external experts, PricewaterhouseCoopers and even Ernst & Young, and they assess our solutions and they make sure that they're compliant in every country we operate in.
Thank you. So the same attendee wants to know why they would engage with OpenText when they already have a relationship with PricewaterhouseCoopers. They're already advising this prospect on their taxes.
Okay, well, that's smart. That's a very good plan to be prepared and work with an accounting firm like PricewaterhouseCoopers. Some of the challenges we see, though, is they typically take a high-level business approach, focusing on the taxes. They can identify all use cases and how to address them, but they don't really go into the technical EDI field details. That's not their area of expertise. We see a clear gap there. So what happens is we look at those mandates from more of a data perspective. We make sure that the government specifications, requirements, and mandates are followed and supported throughout your data. So we're looking at it at a technical level than they would. They're approaching from a tax perspective. A simple example would be in France's e-invoicing mandate. The number of flows that they have alone are over 300 different business rules that apply to various fields and elements of information that you're going to need to have. So we use that information. We help our clients design and build the application files that's going to contain all of that data. So we're not just strictly looking at it from the higher level that PricewaterhouseCoopers does.
Okay, thank you. Another attendee wants to know, how long does an e-invoicing readiness check analysis take, and do we have an average time frame?
It can vary, obviously, the size of the company. So a standalone engagement for a simple country mandate with maybe just a regular set of invoicing flows, estimation would be about 5 weeks. So that would be our benchmark, essentially. With the first phase, the initiation phase being about a week. The second phase, during analysis, we see usually is a 3-week window. And then the third phase is our workshop, which lasts about 1 week. So that's all standard. Now, if you have a large number of subsidiaries or regions with lots of complex flows, that obviously could extend into a multi-month engagement. But we're very capable of scoping and giving you a quick estimate upfront.
Thank you. Which countries does the service include?
Well, which ones don't we include? That might be the shortest list. Essentially, we offer services through France, Italy, Belgium, Saudi Arabia, Australia, Hungary, Slovakia, Portugal, United Arab Emirates, Latvia, Romania, Poland, Slovenia, Spain, Croatia, Germany, and Malaysia. But that's not an exhaustive list by any means. We will always work with you. Let us know what countries you're looking for, and really there's no limit to what we plan to support.
Thank you. We're almost out of time. We actually are out of time, but I'd like to go ahead and get you to answer this last question. What are the determining factors for cost estimates?
Well, currently the key factors, the number of flows for invoicing and reporting life cycles, as well as the number of ERP environments we may be working with. Those are some of the critical factors. There's different levels of complexity between the countries as well. So that's going to play a component as far as what countries we're working with for you and how complex they might be. Those are really the key areas that we focus on for pricing. Hopefully that gets you enough of an answer.
All right. Oh, thank you, Beth. That's all the time we have today for questions. If you think of anything else, go ahead and put in the chat and we'll reply via email. And want you to be aware that a replay of today's event will be available on demand shortly. And of course, we invite you to share it with your colleagues. Thank you to our audience today. This concludes our event. Have a great day.